Welcome to the Real Estate Guys radio program. Every week we get to talk real estate. Some weeks we get amazing guests. This week, one of our favorite guests in the world, it's you. Ask the guys your questions, our answers on the Real Estate Guys radio program.
Hi, this is Patrick Donahoe, CEO of Paradigm Life. Wall Street and banks spend billions of dollars per year in advertising with the goal to convince you that they are the solution. But take a look around. None of their advice has worked. If you're listening to this, odds are pretty good that you're already a real estate investor, or at least becoming one. So why do you do it? Is it to hedge inflation, the tax benefits, or maybe it's to get your money away from Wall Street? It's because of these benefits and so many more that I created the Real Estate Investor's Guide to the Perpetual Wealth Strategy. When you combine successful real estate investing with the perpetual wealth strategy, you have the recipe for what has helped the wealthy to establish their financial well-being for decades. You can download the Real Estate Investor's Guide to the Perpetual Wealth Strategy today by clicking the Resources tab on the Real Estate Guys Radio homepage. Don't wait, go download it now.
Memphis is famous for being the home of the king of rock and roll, but it's also the king of cash flow. If you're looking for affordable cash flow properties, it's hard to beat Memphis. Get your portfolio rocking and more cash flowing your way by calling Terry Kerr at Mid-South Home Buyers. Terry's the king of turnkey properties. Contact Terry through the resource section at realestateguysradio.com. And be sure to order Terry's tips for turnkey rental property investing report. It's free. Just send your request to turnkey@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, co-host financial strategist Russell Gray.
Hey, Robert.
One of our favorite things to do is read our cards and letters.
It is. It's fun because, first of all, people always, or not always, but often have nice things to say to us, which we enjoy. It's very encouraging. But the other thing is it keeps it real world. I mean, one of the things that's so important, our whole motto is education for effective action. And we can lock ourselves in our closet and search around the internet and come up with interesting things to talk about that sound good.
Yeah.
But if it's not helping people out in the real world, what good is it?
Exactly.
So, we get real cards and letters with real questions from real life problems and things that you're going through out there. And you ask us, sometimes we have to do a little homework. A lot of times between our own experience and the experiences of the people that we network with, we usually have at least a little bit of an opinion. And so we'll be sharing that with you today.
And in all reality, there's very few cards and letters. There's a few, but mostly it's emails. And if you have a question for the guys, you just go to the website at realestateguysradio.com and click Ask the Guys. Here are the disclaimers. We don't give advice. We give ideas and information. And we're not professionals. We're not attorneys. We're not CPAs. We don't even play them on the radio. So we're just giving you some ideas and information for you to go, hopefully, make the right decisions. So with that said, here are the questions, and there's so many. We're not going to get to them all, but they're great, great questions. I am so amazed by our listeners. This question comes from Arnie in Minneapolis. He says, what are the expenses you have to know when you're budgeting for your monthly expenses on a 20-unit apartment building on a college campus? I thought that'd be a good starting question because it's kind of a basic question, and not everybody has owned apartments before, and it's pretty much the same expenses you would have on a rental home, but there's things that are the obvious things, and they may be less obvious. Let's start with the obvious. Obvious expenses are utilities. What's not so obvious is who pays for them. I had a couple of master metered buildings over my career, and that means there's one utility bill for the whole building, and that's a hard thing to divvy up fairly and get people to pay for. So that meant the landlord had to pay for it. So who pays for the various utilities? Often your tenant's going to pay for things like electricity and cable television or a satellite dish if you allow that. But sometimes things like gas or even water are paid for by the landlord. So make sure you know that. Next, taxes. Real estate taxes vary greatly from between jurisdictions. So make sure you know, one, what the taxes have been, and two, if that's likely to change. In some places, taxes get readjusted every time there's a new buyer or a new sale. Sometimes they don't, so you'd want to know that. What else? How about insurance? And property insurance can vary based on the coverage. In the United States, for instance, we have lots of riders, things that are additional policy issues like loss of rents. If I want to make sure that I'm not only covered for damage, but if the place were to be inhabitable for weeks or months, I'd be covered for that. So insurance, management. One of the top fees you're going to have, especially in a 20-unit building, is going to be management. And you have to ask, do you have or need on-site management? Or could it be a third-party remote management company? And, of course, maintenance and repairs, landscaping, things like that. The obvious things. Now, there's a few things that are less obvious. If I've got 20 units to fill, that means I probably almost always have a vacancy, so I need to think about marketing and advertising.
Right.
Maybe that's part of the management company's job, but maybe not. What about memberships to the local apartment association, subscriptions to magazines and newsletters, those kinds of things? Office expenses. If it's 20 units and there's an office, well, there's going to be electricity for the office, and there's going to be a computer, and there's going to be all those kinds of things. And then what about your general accounting and legal? Now, when we were discussing this question before we started, you brought up a great one, and it has specifically to do with being a college rental. I managed a building that was a block from a university for many, many years. Bad debt.
Yeah, bad debt for sure. What's the old story about the college kid? How can I be out of money? There's still checks in the checkbook.
Exactly. So bad debt is bigger in some places like that. And then I think pest control also near a college.
Carpet cleaning.
Yeah, cleaning for sure. I don't know if there's any expenses that are unique to college. I mean, we had a couple of buildings near college campuses, and I don't know if there's anything unique to that. I know that one of the ways that we got tenants was to go to the student housing office and always have a nice, beautiful brochure. I mean, today you think everything's online, but I tell you, when those new freshmen show up, they go to the housing office and they usually get a paper listing of what's available, and you want to show up there if that's possible. Now, the question you didn't ask, not that we have time, is what about additional income sources on a 20-unit building? It's not just the expenses. There are some other ways to make income, like laundry or other coin-operated vending machines, or even parking. One of my favorite lesser-known income sources is furniture rental. And you don't have to own the furniture to do it. You can come up with a strategic relationship with a furniture rental company that'll be happy to have the business, and they'll pay you a little referral fee for that. So there's a bunch of those. We used to do this class called Landlord Boot Camp where I covered dozens of them, but I think that's kind of the short list of your typical expenses on an apartment building. Anything to add?
No, I think you covered it. You're the expert.
Well, we have one next that's going to be right up your alley, so now I have something to say about this one. This question comes from Ryan in Lubbock, Texas, Hub City. All right. Hey, guys, I'm a fairly new investor, about a year now, and I'm taking your advice of trying to figure out what kind of an investor I am. I currently have 2 single-family residences that I'm renting out, and I'm working on my third, but I'm also interested in basic commercial, agricultural, and lifestyle properties like in Belize. Is it wise to start diversifying early, or should I focus in a niche first and then diversify later? Thanks for your time, and I hope to see you soon at the Secrets to Successful Syndication program. All right, Ryan, well, we hope to see you soon as well. This is a great question. When you're starting out, how narrow do you get?
Yeah, it is a great question. It's a very mature question. It's a very wise question. So congratulations on asking it, because it's easy to get shiny penny syndrome. It's easy to run around and chase every kind of opportunity. It's easy to start things and not finish them. And so the question about how much is too much is really depends on you. It depends on how much time, energy, and focus you have. Obviously, this isn't the only thing you're doing in your life, so you have to ask yourself, what other responsibilities do I have? A single person who's a full-time investor is very different than a part-time investor who's married and got children and a full-time job, So you have to ask yourself that. The second part of it is, who are you connected with? In whatever you're doing, in the beginning, you're a novice. And so you're bound to take longer to figure things out, to get things done. You're easier to get stumped facing a problem you've not seen before. You may not have on deck all the typical types of help and resources and things that you would need. So if you have access to people, either paid or unpaid, to mentor you in a specific product class, that can make all the difference. Also, team. Same thing. We say all the time, hey, great market is great, but if you don't have great boots on the ground team, then you may be happier if you're in a lesser market where you have a great team. Well, the same thing is true in terms of a product niche. You may say, hey, the hottest niche going right now is whatever, and I would really like to do that, but I don't know anybody. I don't have a mentor. I have zero experience. Now, over here, I got this niche. It's a pretty good niche, but I've got a mentor. I've got people who are experienced, who've got my back. I've got a lifeline if I get in over my head. I would much rather focus my attention on something where I know I'm part of a tribe, where I've got people who can help me when I get stuck, than out there trying to pioneer the thing all by myself, even if it's the hottest opportunity going.
Yeah, absolutely. And I think especially since you've got some history in single family, nothing wrong with getting rich in a niche. A lot of folks can make a lot of money just stacking up those single family rentals. Now, having said that, begin with the end in mind, Stephen Covey would say. If you're planning to own commercial property and agricultural property and resort property, start poking around a bit. It brings up this idea of, if I was going to buy 2 rental houses, should I buy them both in the same market or 2 different markets? Well, there's pros and cons. Once I found that great team, that great manager, I want to exploit that. If I get a great property manager, I want to put more in his or her portfolio. So I might weight heavy in a market because of a great team member. On the other hand, if I want to diversify across two markets, imagine, two states in the US or two countries in Europe. If I want to diversify, now I got to learn two sets of, standards, whether it's law or just practice customs or all those kinds of things. I've got to meet two different teams. I've got to go to two different places. So there's not a right or wrong. I love to diversify, but I'll tell you what, we're not in 100 markets. We're diversified perhaps more than many people are, but we're not crazy all over the place. We only know a handful of markets really, really well. So diversification is great. I do think the idea of getting really good at something to start is an excellent way to begin.
And there's another part to it too, because we're talking about markets and we're talking about teams, but the other thing is investment objectives. These different product types and markets behave differently. And so if you're trying to accomplish something in your portfolio, whether it's equity growth or whether it's cash flow, and a lot of times people think that their emphasis should be on cash flow early, but they don't have a strong enough equity base. If you've ever played the game Cash Flow by Robert Kiyosaki, in it, usually the key is either to borrow very heavily in the beginning, if you can swing the interest and buy things that have a chance to create a big capital gain, and then you deploy the capital equity that you created into purchasing streams of income, and that's how you get out of the rat race. So that's kind of the same thing. If you're looking at your particular situation and where you're at in life, and you say, hey, I need to build a capital base, then you may want to focus on product types and markets and teams that give you the best opportunity to create rapid growth, maybe fixer-uppers, maybe up-and-coming markets or product types, catching something that's down that has a chance to go up, versus, hey, I'm at this time in my life where I'm really trying to build stability and I'm willing to give up a little long-term growth in order to have that steady income. Well, that's going to be a different mix too. Sounds like you're on the front end, you're probably more interested in building a capital base, but those are the types of questions, no matter where you're at in life, you have to answer. It's about market, it's about team, it's about product type, and what it is you're trying to accomplish in your portfolio.
The other thing is the more interested you are in it, the longer you'll stay in the game. So what speaks to you? What are you excited about, right? I think single family homes were great, but I'm bored to death of them.
Yeah, that one's huge. And I just want to jump in because I've, since in the 15, 16 years that we've been working together, Robert, I've watched you go through this evolution. And in the beginning, it was any market, any property that had a chance to make money. It was just the thrill of the deal. Well, some of those deals came with hair. Some of those markets came with hair. And after, crawling around some C-class stuff and getting flea bitten and all the different things that we went through, you get to a point in life where you're like, I don't need to do this anymore. And, if I could really do what I want to do and travel where I want to travel and be involved in subject matter that's really interesting me, what I'd like to do, you decided to focus on resort property investing. That's not for everybody, but it gave you a chance to invest for equity, which is a big part of what you like to do. It gave you a chance to travel to a place of the world where your family's more involved. When I first met you, you weren't a family guy.
That's true.
And so you'd go wherever, and it didn't matter. You could sleep at a Motel 6 or a flea bag motel. It didn't matter. But now, when you go to do your work, it's like, well, if I want to bring my wife and kids, what are they going to do in a C-class neighborhood or whatever? So again, exactly. Not putting down C-class. And we know people that make a ton of money in it. But I think Robert's point is really well taken, is you really have to think about where your energy is at. You have always told me from the entire time I've known you, I don't want to get involved in distress. Well, we can make money in foreclosure. We can create a vulture fund. I could, but I don't want to. I don't want to be in that space. I'm not putting down people who do that.
Right.
But me personally, I don't want to do that. And so because of that and my partnership with you, I've never got involved in that space either. It's never been interesting to me. My personal investment philosophy is I go where you want to go, mostly because I'm not really a deal guy deep down inside. And so I have to be linked to a deal guy. And that's part of my personal investment philosophy. So the point is, you do have to know yourself and what you're good at and what you're interested in. And, for me, I don't like getting my hands dirty. Robert, you do. You like to kick the dirt, or in this case, the sand. And that's great. I can go along for the ride, and I do my part in the partnership. And of course, you do the deal side of it, and it's a lot of fun.
Yeah, and that's the other thing, is that as you're expanding your real estate holding, is there a personal partner philosophy you want to take on? Do you want to look for other team members and have complementary skill sets and all that kind of stuff? So there's not a right or wrong. I think, Ryan, just search your feelings, right? Go through through
Trust
it.
your feelings.
Go through the process of personal investment philosophy, and then keep at it, man. Just keep up the good work.
Well, just one quick last comment is, building a resume. If you think about where you're trying to go, if you're, say, for example, working on building a financial resume, building a lending resume, building an experiential property management resume, especially if you're going to go down the path of syndicating down the road, then you may pick projects and properties based on wanting to get something specific onto your resume. So think about that as well.
All right, our next question comes from Stephen in Havelock, North Carolina. He says, recently I was offered to be part of a private lending deal, but I don't understand the context of how to lend or what to do in a private real estate lending deal. What resources and information can I find that would assist me understanding and managing the risk, conducting proper due diligence, and gaining the proper return through education and the resources available? All right, Stephen, well, first of all, private lending is a very interesting part of the real estate vernacular, and it can be a great opportunity for some. And there's two ways to do it. One is to make private loans, and one is to be part of, say, a private placement where loans are made. And since you said you were offered to be part of a deal, that may be what you're looking at, but there's lots of ways to do it. It all boils down, though, to understanding the same things.
Yeah, so the lending is basically pretty simple. You're going to have a piece of collateral that you're lending against, and that's going to secure it in case you don't get paid. You're going to have a borrower that you're lending to, who the plan A is that they will pay you. And, then you're going to have the act of servicing that, which means collecting the payments and distributing the money back out to the investor. So that's your basic model. It's pretty simple. But lending has become more complicated in the wake of 2008, if you're in the United States of America anyway. And so one of the things you have to understand is if you're going to be operating as a lending company, or you're going to be investing in a company that wants to be operating as a lending company, then you need to make sure that that company is going to be compliant with applicable law. And there's federal law and there's local law. But you do need to be aware of how you're being regulated. So if you are investing as a passive investor, then you're not really needing to understand how the company does its business. You're investing in the management team who's going to be running the deal, and you need to understand what their experience is in originating loans, because that's what it's called when you originate the loan, and then servicing the loan, how they're going to collect the payments, in foreclosing or processing a default, how that works.
And that varies in different countries and different states.
It could be judicial or deed of trust in the United States. Those are two different processes. You need to understand what the basic guidelines are going to be. There's a thing called protective equity. So if you go and make a loan for 100% of the value of the collateral, well, there's no protective equity. So there's a lot of moral hazard for the borrower just to go, you know what? I'm underwater. I'm going to walk. Now you foreclose on a property with negative equity, and you've got to wait it out to even get out and get even because you got transaction costs. So that's hairy. Most private money is going to be 30 to 40% protective equity. Not necessarily, because all private means is it's not institutional. It's not going to get sold on the secondary market. It doesn't have to conform to Fannie, Freddie, or any of that kind of stuff. But the idea of having protective equity, so you want to understand that. How much skin in the game does the borrower have? How much room can the market pull back before I have an underwater property? And then, of course, the debt to income ratios. How is the property generating income? How much of that income is available to service the loan versus how much needs to go to operating expenses and bottom line profit to whoever you're lending to? These are all underwriting questions. Again, if you're doing the underwriting, you have a lot of training. If you're only investing, then you just need to know enough to know that the people you're investing with know what they're doing. You care about their training, their track record, who's advising them. You want to understand a little bit about their business policies and procedures in terms of protective equity and compliance to the jurisdiction. And that's about it. Other than that, then it's just math. How do you get the ROI? And that's a different discussion. What are they offering you? If somebody says, oh, we're making these loans and we're doing these hard money loans at 10 or 12%, now we're going to give you 11. Well, I'm telling you, you can't run a lending business on a 1% spread. You're not going to be able to do it. So it's got to be a realistic model. Hopefully you've got somebody advising you, an attorney who's familiar with the lending business, who can look at the basic parameters of the offer and go, yeah, this makes sense. I remember one time, Robert, you and I were approached by someone to make an investment in a gold mine or a gold processing mine. We didn't know anything about the gold business. And so it was my job. I was running the due diligence on that particular opportunity, and I was collecting the paperwork and so on, asking questions. I didn't even know what I didn't know. And I got to a point where I said, you know what? Now I need to go find somebody. So instead of trying to teach myself the gold business, I spent the limited amount of time and resources I had to go find the best legal firm in the country that had experience in this space.
Yep.
And I hired them for just a little bit of money to give me a quick consultation on the basic premise of the deal. And it saved us a fortune because the guy says, look, I've been doing this 25 years. I don't have all the details in front of me. I'm not telling you what you're saying is bad or not real. I'm here to tell you in 25 years, I've never seen a deal that looked like this that was good.
Yeah.
I said, okay, that's good. And then I needed to decide if I wanted to spend more money to dig deeper or if I decided to walk away. He gave me a few questions to ask. I went back, didn't like the answers. We walked on the deal. That turned out to be a good move.
Yes, absolutely. Now, there's two ways to invest in real estate. You can invest in the property and have all the upside and all the downside, or you can invest in the lending, in which case you have a pretty much predetermined rate of return. So part of that's about personal investment philosophy too. The good news is there's lots of resources about how to get in the note business and private lending business. So if you poke around, I'm sure you'll find that. It's Ask the Guys today. Your questions, our answers. Lots more when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Ranked by Forbes as one of the fastest growing cities, Orlando, Florida has a big and diverse economy, yet still features affordable rental properties that cash flow. Our boots on the ground turnkey provider Greg Bond at Greater Orlando Homebuyers can show you how to start generating cash flow today. He just wrote a special report to help you discover the magical market of Orlando. Request your free copy today. Send an email to orlando@realestateguysradio.com. That's orlando@realestateguysradio.com.
Hi, this is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, no matter how you do that. For you radio listeners, awesome. If you're listening to the podcast, well, that's great too. If you're listening on our site, excellent. There's no wrong way to listen to the Real Estate Guys, and there's no bad question. We love your questions. If you have a question for the Real Estate Guys, just go to realestateguysradio.com and click Ask the Guys. Got a bunch from today. This next question comes from Robert in Madison, Alabama. If I'm not mistaken, I don't think we've ever actually answered a question from someone in Madison, Alabama. Anyway, Robert, I love your podcast. Well, it's our podcast. And I also listen to Robert Kiyosaki's and Peter Schiff's podcast.
I'm going to change my name to Robert so I can be popular too.
Who are some other people that have good podcasts who are in line with your thinking and perspective? I haven't been able to attend one of your events yet, but our young real estate investment company is steadily growing, and I expect that within 12 months, I'll be able to work full-time for it, at which point I'll be able to attend your events and conferences and meet some of those other great people as well. All right, well, good stuff. There's a ton of great information out there. You know, we were one of the first real estate podcasts and still one of the most downloaded, but so many great ideas. And I would question part of your premise, which is, don't just listen to stuff that's in line with your thinking.
I was thinking exactly the same thing.
Right? You got to hear both sides of the coin, as Kiyosaki would
Yeah.
say, right? Listen to one view, listen to the other view, try to stand on the edge of the coin. And, you want to be attracted to people that are talking about stuff you're interested in, that's for sure. But always kind of listen to the other side. Having said that, I think there's a ton of great information. I mean, literally, you could listen to podcasts 24 hours a day and not scratch the surface. And podcast as a medium is becoming more popular. It still is tiny compared to where it's going.
Yeah, I think a couple things. One is both the podcasts that you said you listened to, Robert Kiyosaki and Peter Schiff, they're not necessarily real estate podcasts. They're bigger picture. Peter talks a lot about macroeconomics and the dollar. Robert talks about entrepreneurship, and he talks about a lot of things going on at the macro level. So you may want to add into the mix stuff that's a little bit more practical, tactical. Bigger Pockets is a great podcast that puts out a lot of great information for hands-on real estate investors. Kathy Fetke with Real Wealth Network does a good job with her podcast. She's been on our Investor Summit at Sea and spoken at our Secrets of Successful Syndication seminar. There's many other people that do things that are a little bit more niche-y. We had Rod Khleif, who does a podcast, and he specializes in multifamily. Michael Becker, who teaches at the Secrets of Successful Syndication most of the time, has a great podcast, and he's a multifamily guy.
He and his partner, Paul, they do the Old Capital podcast. We certainly love Chris and Adam from Peak Prosperity, not a real estate podcast, and probably one of my favorites, Simon Black's podcast, which is, he puts out when he gets around to it, not regularly scheduled, but amazing stuff. Keith Weinhold from Get Rich Education. Keith's been a listener a long time. He's got a great podcast, a lot of good guests. Wealth Formula with Buck Joffrey, another great, not just real estate, but opportunities for investing kind of across the board.
Well, in Buck is specializing in talking to people that are highly paid professionals, the high income earners that are too busy, that are looking to find things that they can put their money in that isn't, Wall Street.
Well, there's a bunch in there. We could list a bunch more. I know Russ listens to a lot of podcasts on gold and metals and those things, and I listen to a lot of podcasts on Kardashians. That's really just what
beer and Kardashians.
On beer, yeah. But there's a lot of good stuff out there. And it's like I read this pretty cool book, and one of the techniques is to read 3 chapters in a book, and if it doesn't sing to you, set it to the side, right? If you're not in by 3 chapters, so same thing with podcasts. Listen to a couple of shows. If it's good, go for it. If not, next.
Yeah, I'm the king of that. I have so many books that I've started, and many I don't feel obligated. If it's not good, it's just like eating. You don't have to eat the whole dish if you don't like it.
All right, next question is from Grant in Denver, Colorado. Thanks for reading my question. I've been a listener of your show for about 6 months now. I'd like to find a mentor or coach. I'm great with paying for them, but I want them to be quality and with your same school of thought. Do y'all coach? I'm interested in finding and purchasing my first real estate asset, rewriting a business plan for my current company, and writing a business plan for a company I plan to open in 3 years. Thanks for any help. All right, well, good stuff, Grant. We are big believers in coaching and in mentors, and we don't really coach individuals. We don't do any of that. We have a syndication mentoring program that really is to coach folks who want to raise money to do deals. But there's a lot of great resources for coaching these days, probably more than ever before.
I think there's a couple of things. We chose syndication because that's primarily how we approach the business of investing, and it's what we felt we were most qualified. We are big believers in more niche type coaching. There's people out there who coach specific product types. Gene Garino teaches assisted living. That's great. We have people that teach apartment investing. So there's different types of niches. So you have to think about what it is you're really trying to accomplish and ask yourself, where is it you're really stuck? What kind of coaching do you need? Some coaches are about helping you get over procrastination, setting goals, being disciplined, following through. Some people need that kind of coaching. Some people just need practical, how do I get it done, and plug me into resources, get me into a network where I can meet other like-minded people. Our syndication program, that's what we do. We've got 2 tiers. We've got our Inner Circle program, which is very small, just a handful of people that we do spend some personal time with. They have access to us, but we don't even talk about it really much on the show because it's limited, that we can't offer it to everybody. But people who come to the Secrets of Successful Syndication seminar get a chance to hear about it. And, when it's full, and when there's openings, there's openings. The other tier that we have is the Syndication Mentoring Club program, which is more online. It still consists of 3 live meetups, but you also have a chance to have a membership-only environment where you're getting courses that are specialized and interviews and a forum where members can chat with each other and share ideas. It's about accelerating success through tribal knowledge. That's not open. You can't just join that, but it's only open to people who come through the Secrets of Successful Syndication seminar so that you have a baseline of understanding before you even get in the club.
And again, that's primarily for folks that are looking to raise money. They've exhausted their own resources, or their eyes are bigger than their pocketbook, so they've decided they want to be in syndication. In terms of just real estate investing, there's good programs out there, and you want to make sure it's a match. And the thing I would recommend is it not just listen to the coaching program and the coach. Talk to some folks that have done it. Talk to some students and make sure there is evidence of success.
Well, make sure that the people who are teaching you do what they talk about. I mean, we could coach on a lot of things. I think we're pretty good teachers. We're quick students. We could get up there and act like we're very experienced in certain areas of real estate, even though we've never done it. But you're looking for real world, and there's something you learn by being in the seat. The thing that we've done and spent time doing is raising money, so we know how to do that.
It's Ask the Guys today. Your questions, and we're the guys that answer them. When we come back, it'll be our turn to ask you a question as we play Real Estate Trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
This portion of the Real Estate Guys radio program is brought to you by International Coffee Farms, where you can own a parcel of land in your very own specialty coffee farm in Panama for as little as $15,000. Here's how it works. Deeded half-acre parcels entitled Specialty Coffee Farms in Boquete, Panama are turnkey managed professionally on your behalf by a team of local experts. Sustainable average income is estimated at 12%, and cash flow can begin within 12 to 15 months from the date of your parcel ownership. International Coffee Farms' mission is to own and operate specialty coffee farms that are economically, environmentally, and socially sustainable. As part of this mission, 20% of the gross profits of each farm is committed to a socially sustainable fund to improve the lives of the Panamanian coffee farm workers and their families. International Coffee Farms currently owns and operates 9 specialty coffee farms with half-acre parcels available for immediate ownership. To find out how you can become a coffee farm owner in Boquete, Panama, email coffee@realestateguysradio.com. That's coffee@realestateguysradio.com.
Hi, this is Garrett Sutton, Rich Dad's advisor. Remember, equity happens, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Tell a friend about the Real Estate Guys. It's Ask the Guys this week. A whole bunch of great questions from our wonderful listeners. If you have a question for the Real Estate Guys, go to the website at realestateguysradio.com and click Ask the Guys. We actually don't answer most of them, just full disclosure, but we look for the ones that we think would have the most impact to a broad audience. So if it's a specific question, we had a guy write in and wanted to know about a particular condominium on a particular street in a particular city. That's not the kind of...
Is this a good deal for me?
Is this a good deal? Do you think the rents are good? Well, we don't know that kind of stuff. But if it's a question that you think not only you, but the world might benefit from, then fire away. Before we get back to these great questions, it's time to play Real Estate Trivia, our chance to ask you a question. And in just a minute, we're going to give you a real estate trivia question. When you hear the question and think you know the answer, what you'll want to do is quickly send us an email to trivia@realestateguysradio.com, trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address, because if you're the winner, you're going to get a copy of Second Chance, the amazing book by Robert Kiyosaki. Last week on the show, we had Kevin Harrington and Dave Zook, and we asked this: which U.S. state drinks the most beer? Of all the states in the U.S., which one drinks the most beer? Now, many years ago, we asked which country drank the most beer, and it's not the United States, but within the United States, which state drinks the most beer? And the answer is New Hampshire, with an annual per capita consumption of 41.7 gallons of beer.
Wow. It is a real estate question because it expands the amount of real estate around your midsection.
Yes, it does. Now, number 2, in case you're wondering, Montana, with annual per capita consumption of just 39.1 gallons of beer. I think I'm moving to New Hampshire. Here's our real estate trivia question for this week. What's the name of the planet in the movie Avatar? Think interstellar real estate.
Cyberspace.
Right? You remember
virtual reality, yeah.
In Avatar, they were on a planet, and that planet had a name. It's a big old piece of real estate. What's the name of the planet in the movie Avatar? If you think you know or want to take a guess, it could get you a copy of Robert Kiyosaki's book, Second Chance. Just send your best guess along with your mailing address to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. What's the name of the planet from the movie Avatar? That's today's real estate trivia question.
And if they get the first guess wrong, well, that's okay. Just send a second guess. We'll give you a second chance.
Hey, our next question is from Bob in Kingston, Washington. And he says, hey guys, I've been a listener to your podcast now going on 9 years.
Wow.
That's awesome.
Have we been doing it that long?
I think we have.
Pretty sure we have.
Yeah, and then some. And you still deliver great content. I don't know how you keep your momentum and energy, but big kudos for keeping the show going with such wonderful value. You know, if we can just stop here for a minute. Anytime you want to pay us a big old compliment like that, it definitely gets your cards and your letters to the top of the pile. All right, so he says, my wife and I are nearing retirement, and we want to start exploring the concept of buying maybe a 1 or 2 bedroom apartment somewhere by the Mediterranean. Could be Spain, France, or Italy. Ideally, we want something that we can rent out during the spring through fall and live there during the winter to escape our fairly dark Seattle winter days. Do you have any tips on the best way to research the cost/feasibility and legal structures for buying rental property in this region? Thanks for the great show and keep up the great work. All right, Bob. Well, great question. And we don't have a lot of experience in the Mediterranean. We've only been to France once, and it was for 27 hours.
It was fun.
It was fun, but it was a whirlwind. So that's not a part of the world we know well. But what we do know is this. Legal structures vary incredibly from jurisdiction to jurisdiction. There's 3 primary bases of law, if you will. And you want to know what kind of law you have because that can determine what kind of property rights there are. But when it comes to looking at any property internationally, you always want to get plugged into someone who is doing it. And we like to start with the person that would manage the property or be responsible for those rentals. If it's a long-term lease where you're renting it for the few months that you're not there, that would be one thing. If instead you're thinking about overnight rentals, vacation type rentals, that would be another thing. But find a professional who knows the market from the rental point of view. Once you've done that, then you find someone that can help you source and locate properties. That'll be the fun part. You've got 3 countries that you've mentioned. It's a beautiful part of the world. They're all going to have different nuances. What language do they speak? How easy is it to access the tax help and the legal help you need? As soon as you earn any kind of income in another country, you have some tax ramifications. They're easy to figure out. You just have to make sure you go through the process of that. And there's different reporting. If you have bank accounts in other countries, do you need bank accounts? What currency do you get paid in? There's a lot to discover.
So let me just give you kind of a little simplistic way to approach the problem. The first thing is this is a lifestyle investing decision. And so it isn't just about the numbers. It isn't just about where the numbers make sense. Because, Robert, you always say live where you want to live, but invest where the numbers make sense. In this case, it's like, well, I need to live where the numbers make sense. But where you want to live is the first order of business. And so you've identified a region, which is huge. So you might spend some time thinking a little bit more clearly about the places that you'd really like to be, and then go there. And when you're there, start looking for strategic relationships, because the first thing you need to do is pick a market. And then once you pick the market, you pick a team. And Robert talked about starting with a property manager. You're definitely going to need a lawyer. You're probably going to want a CPA with international experience. That doesn't have to be there. That would be in the United States. But even if you started here in the United States, if you find a tax advisor, they may know somebody. I mean, people who deal with international clients, people who have networks, it's never been easier to get connected to people in other parts of the world. So don't worry so much about the knowledge. Worry about the relationships. Get the market right and get the right people on the bus, to quote Jim Collins, and then start asking questions, and they will help you pick a market. They know the questions better than you do. You just need to get the right people on the bus. So you need to deal with tax, you need to deal with lifestyle, you need to deal with price points. Once you've got that figured out, your people will help you find the exact property and specific area that you need to be in.
And since it is a lifestyle decision, spend some time there. I mean, that's the hard part of the homework, Bob. But, go and figure it out, because those are very different places. The lifestyle is different. The weather obviously is going to be better than it is if you're leaving the Pacific Northwest. But who knows? I mean, that could be a great lifestyle for lots and lots of years. We know a lot of people that do the snowbird thing, right? They flee the beautiful places that are wonderful in the summer and they get too cold in the winter, and that's a great lifestyle. So good stuff. We don't have specific recommendations because those aren't markets that we know well, but I think if you'll kind of follow the logic that we've laid out here, you'll do well. And always get a referral. If you meet a great agent and you decide, you know what, this isn't really the market we like, but gosh, this agent was great, ask that agent for referral to someone in a neighboring country. Often through their networks or their companies, they're able to do that. It's Ask the Guys. Your questions are answers. We have 3 questions in a row on Belize. And they're quick, so I'm going to get to 2 of them, and then we'll answer, and then the third. So these questions all came in since our last Ask the Guys show, and this is Travis in Maple Grove, Minnesota, says, I'm thinking of going on the Belize trip. It sounds amazing. Realistically, do you have to be extremely wealthy to invest there, or are there ways for average people to get involved in some way? Great question, Travis. Hold that thought. Next from Brad in Bakersfield. He says, hi, guys. Love your podcast. I'm wondering what type of investments are typical in Belize. What are the price points, returns, etc.? And is there a way to work around the lack of available financing? I look forward to your response. And then the third question is very specific. So just those first 2, let's talk about that. In Belize, there's opportunity. Obviously, you've heard the show. You've heard us touting Belize for the last dozen years. We like it there for lots of reasons. It's a strong market. It's an overnight rental market, but there's still commercial investments there. There's month-to-month tenancy. There are all kinds of different investments.
Well, remember, we're talking about a country.
Right.
So it's like, can you imagine somebody comes saying, well, you know, what's the United States real estate market like?
Yeah.
Well, I don't know. Iowa, Omaha, Manhattan, right. San Francisco, they're all very different.
But in general, and if you come on the trip, we'll show you stuff from $50,000 US up to over $1 million. Travis's point, do you need to be uber wealthy to invest? Absolutely not. There are properties where owners will carry the financing. Now, Brad mentions a very important point, which is there aren't typical bank loans like you might find in other places. So we're used to putting 20% down and getting a loan for the rest. That's not going to happen to too many folks in Belize. It doesn't mean there's not opportunity. There are definitely workarounds there. So, but it's like anything else. You got to get educated about the market. And within the country, as you point out, Russ, there's lots of different regions, lots of different opportunities. There's parts of Belize that are absolutely breathtakingly beautiful, but there is so much land available that the prices haven't changed in the dozen years I've been going there. And there's places where everyone's going and the indicators are there and the prices have been crazy. In the 12 years we've been there, we haven't seen a buyer's market. So it's not oh my gosh, there's bargains everywhere. But if you're smart and if you're strategic, the returns can be phenomenal.
Well, so real estate investing is pretty much the same everywhere. It's supply and demand. And if you're renting out a property, whether it's weekly or monthly or whatever, you just have to understand the supply-demand dynamics. And there's parts of the country, just like in any market, where the supply-demand dynamic is favorable for the investor. And you have to understand that. That's one part of it. The financing thing is easy to take care of, and you can do it a couple of different ways. Let me just give you some practical ideas. When I wanted to buy a property in Mexico, there was no financing. So a group of us got together. We sliced the property into 10 pieces, and each one of us paid 1/10.
Now, they didn't actually slice the property.
No. We used a chainsaw.
Metaphorically.
Yeah, no. We divided it up, and we divided up out of 52 weeks in a year. There were 30 weeks available that we decided that we would give to the owners, and we would rent it out the rest of the time. And when we did the math on what we could get during those 20 weeks that we weren't using it when it was rented out, that was enough to pay for all the maintenance and give a little bit to each owner. On top of that, we had 3 weeks of our own. So there was no financing involved. Now, me personally, what I did, and this is the second part of the strategy, is I refinanced a property in the States and then took the equity and put it in there. So I had a nice low interest, tax deductible payment in the United States, which was great for my U.S. tax return. And then I put the equity in Mexico through, and I couldn't own the property directly. It's complicated, so I won't get into that. But you could do the same thing in Belize where it's less complicated.
Because you can't actually own the property.
You can't actually own the property there, unlike Mexico, which is why I no longer have the property in Mexico. And I decided that I like Belize a whole lot better. But we did the Mexico property before we discovered Belize. But the idea is you transfer equity from a market where you have it and move it into a market like Belize. Now, coming to one other key component is when you move equity from a market where leverage is available, and part of the reason you have equity is because leverage has inflated that market because of easy money, which is what we have going on in the United States, and you can move that equity while it's still there before there's a correction in the market into a market where there is no financing available. You could make the argument, and you have to analyze every market, and certainly we have a lot of familiarity with Belize, but markets that don't have financing available, when credit markets blow up, which is typically what creates a financial crisis, it doesn't really have as big of an impact on marketplaces that don't have financing. So the pricing is more stable. The equity is more stable in a non-financed market. Now, if financing happens to come in down the road and you're already there, then all of that air comes in underneath you and raises up your values. Now, we can't say that's going to happen in Belize, but it wouldn't surprise us if it did. So there's definitely ways to play. You don't have to be rich. You can do it with partners. You can do it with low-cost financing in the States, repositioning equity. There's certainly affordable properties. You can do that. But the key is, to your point, Robert, get to know the market. Well, first of all, get to know yourself and ask yourself, what is it you're looking to create? Cash flow, lifestyle, equity growth, privacy, asset protection. You figure it out. A combination of all. You figure it out what I'm trying to achieve. You go visit the market, learn the market, ask yourself, will this market help me achieve what I want to achieve? You've been doing these tours forever. There's nobody on planet Earth that knows that country really better than you from an investor's point of view. So if you get a chance to go on a tour, and it's a great opportunity, I'm going to plug this for a little bit because the boats that you guide people around in, Robert, only hold at most 20 people.
Right.
So this is like 3.5 days where people get to hang out with you and learn this market. It's very interactive, very social. If you want to get a chance to know Robert on a personal level, there's no better place to do it than on a Belize field trip. And he'll teach you the market. And then the next step is, if you decide the market can do what you want to do, is to build a team. On all of our field trips, whether it's Belize or Memphis or wherever, our field trips are designed to teach you the market and introduce you to the team. We don't sell real estate. We want to teach you the market, introduce you to the team, and let you guys take it from there. If you decide that you like what you see, then you get together offline, do whatever you want to do. That's up to you. But when you have a team to help you, they can help you find the right opportunity, the right situation for you. And you can't get all that done in a weekend, but you can learn a market and meet people in a weekend, and it's well worth it. Plus, the worst thing that happens is you spend 3.5 days in a place that most people pay a lot of money just to go on vacation on. So you're going to get what feels like a vacation, but is really a business trip. Check with your own CPA about that. And you're going to learn some things, and you're going to build some relationships. It really is a win-win. That's the worst thing that's going to happen.
One of the most amazing testimonials we've ever had on the Belize field trip was from a gentleman who's been on our summit, but more importantly, has been selling real estate in Belize for 10 years. He said, I learned more on the Real Estate Guys field trip to Belize than I've learned in my 9 years of living here and selling real estate.
And that's a guy that was on TV talking about real estate in Belize. So.
Yes. In fact, he came on the trip twice. Remember that? He came on the trip again, and we're like, what are you doing here? He's like, well, I figured some new stuff's happened. I better stay plugged in. Amazing stuff. So we'll introduce you to lots of folks there too. So if you're interested in Belize, come on the field trip. But there's also lots of ways you can get information about it. Just don't believe everything you read on the internet. Hey, our next question about Belize, we'll cover when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
The Real Estate Guys are throwing a party, and you're invited. Join Russ and I at the New Orleans Investment Conference, October 25th through 28th. Now in its 43rd year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Robert Kiyosaki, Chris Martenson, Peter Schiff, and many, many more. The Real Estate Guys are speaking in 3 different sessions and attending lots of others, and we're hosting a hospitality suite one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make plans today to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. Send an email to neworleansparty@realestateguysradio.com and we'll get you all the details. That's neworleansparty@realestateguysradio.com, and we'll see you in New Orleans.
For investors, timberland has become the symbol of safety. Global tropical timber demand continues to surge as the world's population increases. The need for managed, sustainable timber production forests has never been greater. When stock markets crash, trees keep growing. Direct ownership of fully managed tropical timberland acreage is now available to accredited investors. Prime valuable hardwood groves close to the beautiful Costa Rican border generate and maintain superior long-term wealth. Qualified, accredited investors should email timber@realestateguysradio.com for more information. Consider visiting our forest plantations to see for yourself. Email timber@realestateguysradio.com. This announcement does not constitute either an offer to sell securities or a solicitation of an offer to purchase. Offering made by prospectus only. For more information, email timber@realestateguysradio.com.
Hey, this is Peter Schiff, and when you're not listening to me at schiffradio.com, make sure and listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show and for all your great questions. Hey, if you want to do bigger deals using other people's money, coming out to the secrets of successful syndication, all the details on our website at realestateguysradio.com under events. It's Ask the Guys today. So many questions, so little time, but here's a great one. Also about Belize. This comes from Craig in Rosemont, Minnesota. We're considering investing in Belize and wonder if the IBC, International Business Corporation, is the only corporate structure we need for two parties to go in 50-50. Or is there another layer of corporate structure that would be better? All right, well, first of all, that's a legal question, and we're not legal advisors.
And we're certainly not Belizean legal advisors.
We're certainly not, but we know some. So literally, we can refer you to a great Belizean attorney, so that's a possibility. So the answer is a lot bigger than just Belize, which is why I wanted to answer this question. A lot of times people buy properties in foreign jurisdictions using an entity of some kind, and a popular entity offshore is an IBC, International Business Corporation. Now, we can't get into all the nuts and bolts of it here, but the bottom line is it's perfectly acceptable in most countries, Belize for sure, to own property in your own name. You can do that. But for the same reason you wouldn't probably do that in the U.S., you'd use maybe an LLC or a limited partnership of some kind. In many of these jurisdictions, you'd use an IBC, and it's got its whole documentation and the legal aspect of that, which you'd want a local attorney. Now, IBCs are domiciled in lots of different places, Cook Islands and British Virgin Islands and kind of all over the place, Cayman Islands. So there's lots of places you can find out about these particular entities, but it's perfectly legal for you to own real estate inside of one of them. What you have to ask about is, do you need to qualify to do business in the local country? Because what you can't use a Belize IBC for is to buy Belize real estate. I can use a Nevis IBC to buy real estate in Belize, but I can't use a Belize IBC. Part of the way that an IBC works is it cannot do business in its domiciled country. So a BVI IBC can't do business in the British Virgin Islands, and Antigua IBC can't do business there, and so on. So there's a lot to that. The other layer of protection that you're talking about is something we often do. Say we're going to fund a syndication offshore. We often will have, say, a U.S. entity, an LLC, that is our funding mechanism, and it owns, wholly or otherwise, the IBC in another country. That gives you just a couple of layers of legal protection, and there's myriad reasons to do that. But since we're talking about Belize, come on the Belize field trip. We'll talk about all that stuff while we're offshore over a beer.
So I just have a couple of little inputs, and Robert is clearly much more knowledgeable about all this than I am. But the bigger question is just making sure that you understand what it is you are trying to accomplish, why you would want to hold it in an entity, and then understanding all the ramifications. Normally, when it comes to any type of entity structuring or asset protection or estate planning, you're going to be dealing with three different major topics: asset protection, privacy, and tax. And especially when you own an offshore entity, it opens up some considerable tax, not liabilities, but responsibilities from a filing point of view that you need to really be aware of. From a privacy perspective and an asset protection perspective, there's also some things to consider. So step number one is, once you've determined the market and the kind of property you think you're interested in, is to get the team. It's the same theme we've been saying the whole time, but this is where you get introduced to people who can help you. And in this case, you're going to want to have somebody in the foreign jurisdiction working with somebody in the domestic jurisdiction. And when we talk about the importance of getting a 360, really important that you understand all of the different ramifications of the decision. You don't need to be afraid of it, but you do need to do your homework and make sure you understand, because you don't want to learn the lesson by making a mistake, especially when it comes to offshore financial transactions as a U.S. citizen.
All right, good stuff. Hey, our last question comes from Darian in Sparta Township, New Jersey. But we don't have time to answer it. I only bring up his name because he's going to be at the Secrets of Successful Syndication. So, Darian, come say hello to us and we'll answer your question in person. But we will do another Ask the Guys. Over a beer. But we will do another Ask the Guys in the future. So if you have a question for the Real Estate Guys, just go to the website at realestateguysradio.com, click Ask the Guys. Big thanks to all the listeners that submitted questions. And until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers, low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct, asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.